Hello guys, what is up? Welcome to Witness FX, up to another video. And today we'll be talking about outsmarting the market traps part 2. Right? So I'm just gonna show you guys a trade that I took on Friday. That was yesterday. And here's what I like to do when I enter a market. So overall downtrend, right? Overall downtrend. But then market showing signs of bullishness. Right? And yeah, so what I like to do is outline my highs, which is this high. I'm just going to mark it out right here, this high, and I see another high. Also outline my highs, which is this high, another high, right? Low, high, low, high, the extreme, and this is the low that causes a high. You see price went up. Now this is the extreme. Some will take trades here, which is the decisional. Good for them, but that's not how I trade. And if you did take a trade from the decisional, the last OB, which is somewhere around here, right? Price came back, went up here. I mean, it would have still been a good trade, right? But now, in my opinion, this other block has not been mitigated. This OB has not been mitigated. I know a lot of this from experience, right? And price comes close, especially when you're dealing with the lower time frame, and then it looks like it has been mitigated, but it hasn't. Now you can see this break of structure. You see that price break structure here. This high is taken out, and this is the OB responsible for that, which is here, right? Now something wonderful happened here. If you had used this OB, right, that broke structure, and you were waiting for a continuation of bullish trend, you would have been stopped out by this week. So what I did was, I didn't use this other block. No, I used this one because I knew that it had not yet been mitigated, and I was aiming for buys, had my stop loss below, and I had this target, this liquidity, like this equal highs. I would have put my stop loss, my take profit here, but I didn't. I was just targeting a nice I think it was 1 to 6, right? So this was it. Price came in here, tapped my limit, and went flying up, hit take profits. I'll show you the trade, right? So this was it. I set my buy limit, although I didn't wait for my buy limit, and this is it. I entered earlier. I would have missed the trade, and this was that trade, right? So it was the trade, and then we had price eventually coming and hitting take profits here, right? So not to outsmart or avoid these market traps, what I do is I outline my break of structures and my order blocks. Sometimes what will happen is price will break structure, right, and then break structure again, and some people might want to use the order block after the recent break of structure, but I always wait for the unmitigated OB, for price to mitigate the unmitigated OB. And it happens so many times where there'll be like multiple breaks of structure, and then price will just violate all those other OBs, come back down, to the OB that wasn't mitigated and then start flying. You would notice here that there is liquidity at this point. Equal lows, one low, another low, liquidity taking, bam. So that was another reason I had for refining all the way down here. Just want to put that out because it's really important. So hope this video has been helpful. If you like, comment, subscribe to the channel. I'll be dropping an indicator based strategy. I think I should be dropping an indicator based strategy in my next video. I don't use indicators, but for those who need indicators, those who trade synthetics, boom and crash, stuff like that, I should be dropping an indicator based strategy on my next video. So guys, peace out, and yeah, happy trading.